This is your Swing Alpha Chart report for December 5th, 2017. First, we'll go over the markets, SPY, which is large caps. If you go back to 2016 and you draw a trend line connecting all the tops of the recent rallies, you can see several connecting points. And then we scroll down to the last few days, you can see we were connecting with the upper end of the trend line again on very large volume here. And we're also seeing somewhat of a selling pattern, selling action. So I'm going to take an educated guess, make a prediction that the consolidation that we've been expecting for the last 5 weeks would occur within the next 1 to 2 months. I'm going to go in and draw a arbitrary trend line that could possibly happen. I will update this trend line as we see further price action over the next couple of days. And I'll also take an educated guess, also a risk that I could be wrong by drawing in a possible direction that I would expect the market to take before we get a bounce and then a continuation of the rather strong bullish market. So we are still very bullish. We would not want to enter any shorts right now. However, we do want to, of course, reduce our long exposure, enter in any hedges that we could find. And if we do go long, preferably longs that are uncorrelated with the market, for example, penny stocks. So we may issue an alert for penny stocks in the near future. Of course, pay very close attention to the allocation size. We typically allocate much smaller positions to penny stocks. Now going over possible hedges, we've mostly rejected the idea of a hedge right now, but we're looking at gold here, and gold, even though it had a very large volume spike a few days ago, it still seems to be selling off. This does not show any hedging potential right now. We want to see bullish action. This could, of course, be a head fake and it'll immediately reverse, but right now, at this moment, we are not going to use gold as a hedge. And very similar with treasuries, we had a very large volume spike again 2 days ago, 3 days ago. However, those right into resistance here, and this is resistance that you could see if you trace all the way back to mid-2012 here, you can see it's continually bouncing off of this resistance point. So it's very strong resistance. Now, of course, we could see a breakthrough going through it. However, we do not have very much upside potential. We still have some resistance up here. So this would not be a very ideal hedge either with treasuries. So we're not going to go into treasuries as a hedge. Lastly, I want to go over a trade that we took on Monday. So CSIQ was a long we had taken on the 27th of November. It should be this green candle right here, expecting it to continue up. It had already broken through this resistance right here once before, and we expected to actually continue after what we thought was a just a fake sell-off right here. Unfortunately, as soon as we bought it, just a few days later, we had an even larger sell-off, very large candle here. So we ended up stopping out, taking a relatively small 8.8% loss.